Hello guys, welcome to another video. In this video, I'm going to be sharing with you how I'm able to combine four indicators. We have a Keltner Channel indicator, we have two moving average, and we have stochastic oscillator to create a high probability winning strategy. Not only that, I'm going to be showing you how to set those indicators, the expiration time I'm going to be using, the candle time frame I'm also going to be using, and how I analyze the chart before I entered any trade. This and many more I'm going to be sharing with you on this video. So if you are yet to subscribe to this channel, go ensure you subscribe to the channel, hit the notification bell so you miss any of my amazing videos. As a disclaimer, this video is not for financial advice, it is just meant for educational purposes. These are based on my experience I have in the market. So right away guys, let's go into the chart. So for those of you that don't know where to navigate your indicators, you're going to come over to this section. This is where you can be able to navigate your indicators. So we're going to be using a Keltner channel, two moving average, and one stochastic oscillator. These are the two indicators we're going to be using right here. So the settings of our Keltner channel comes with the EMA period of 20, the ATR period of 10, while the multiplier as 2. Right here on the style level at the top section, I'm going to be using a green color. I'm going to be using it on 1 pixels. Right here at the middle section, we're going to take it out. At the bottom section, I'm going to be using a red color. I'm going to be using it on 1 pixels. While at the background color, we're going to be using a white color, and you just have to tip down the opacity so it can be much more visible for you in the chart. So when you're done, just click on save. With our first moving average, it comes with the settings of the period of 10. Moving average, we're going to be using SMA. Right here on the style level, we're going to be using a green color. I'm going to be using it on 2 pixels. So when you're done, just click on save. Our second moving average comes with the settings of a period of 8. Moving average, we're still going to be making use of SMA. Right here on the style level, we're going to be using this color. I'm going to be using it on 2 pixels. So when you're done, just click on save. With our stochastic oscillator, it comes with the settings of the K period of 14, the D period as 3, the smoothing period as 3, while the moving average, we're going to be using SMA. Right here on the style level, we're going to maintain all these colors. I'm going to be using them on 1 pixels each. When you're done, just click on save. With this strategy, I'm making use of 30 seconds candle time frame, and I'm making use of the normal Japanese candlestick. Not only that guys, I'm actually trading this strategy on 1 minute. So guys, you can try out both 1 minute and 2 minutes. It works pretty much well, but in this video, I'm going to be making use of 1 minute. I hope you're getting it right. So guys, this strategy is a very simple strategy, and it works both on OTC market and on real market, and this is how it works. In the case of a buy trade, what you need to look out for is a candlestick reversing from the lower part of the Keltner channel. This area right here, this is where you should be looking out for the reversal of a candlestick. Immediately you see that, the next thing you need to put into consideration is the intersection of the two moving average line. When you also see that, the other thing you also need to put into consideration again is your stochastic oscillator. It has to be coming from the oversold condition going towards an upward direction. That could give you a very good confirmation to take a trade. While in the case of a buy trade, the same thing also happens. What you need to put into consideration is that the candlestick has to be rejecting from the upper side of your Keltner channel. This is the green line right here. The candlestick has to be rejecting from that area. Immediately you see that, you have to be looking out for a consistency of a candlestick and also the intersection of your two moving average line. Once you're able to see that, confirm it with your stochastic oscillator line. It has to be going from the overbought condition towards a downside direction, giving you a very good confirmation to take a trade. I hope you're getting it right. All these and many more we're going to be talking about on this video. I do advise you to watch this video to the end so you can be able to understand pretty much well everything we're going to be talking about on this video, guys. So guys, I'm going to go into the market right away. When I find an opportunity, I'm going to come right here and explain to you what you need to see before you enter a trade. So guys, right here we're looking out for a buying opportunity right at this particular level. First thing you can see right here is the rejection of our candlestick right here from the oversold condition, and so far you can see the candlestick are pretty much going well. So right here, let's enter a two trade right at this particular level. Right here you can see the intersection of our two moving average line, and not only that, you can see our stochastic oscillator is moving from the oversold condition into the overbought condition. That is another good confirmation we saw before we actually place a trade. But before you actually place a trade, do ensure the market is stable. As you can see right here, we're having a doji candlestick, which is giving us an indecision in the market. So we must be able to see a decisional and a directional movement of our candlestick before we take a trade. I hope you're getting that right. So right here guys, we have 3 seconds towards the end of the trade. So this is actually a very good win for us on this trade. So guys, I'm going to go into the market again to find another opportunity. So when I see, I'm going to come right here to explain to you what you need to see as well before you take a trade. So guys, right here we're looking out for a sell opportunity right at this particular level. Let's enter it for 3 trade position right here. So the first thing we put into consideration is the rejection of our candlestick right from the overbought condition, and you can see the candlestick is still going towards a downside direction. We also saw the 2 moving average line intersecting right at this particular level, giving us another good indication for us to go on a sell trade. The same thing with our stochastic oscillator guys, is actually giving us a downward direction, which also gives us another good confirmation for us to trigger our trade towards a downward direction. These are all we need to put into consideration anytime we really want to take a trade. I hope you're getting it right. So guys, right here we have 6 seconds towards the end of this trade. As you can see right there guys, we're actually on a very good profit right at this particular level. So guys, I'm going to go into the market for my last trade. When I find another opportunity, I'm going to come right here and explain to you what you need to see before you enter a trade. So guys, right here we're looking out for a buying trade right at this particular level. So we should enter a trade position right at this particular level guys. So the basic thing we saw right here that is giving us a very good confidence to enter this trade is pretty much simple. The first thing is the rejection of the candlestick from the oversold condition. You could see right here the candlestick have been rejected right at this particular point, which is giving us a directional movement of the market towards an upside direction. We also saw right here our 2 moving average line, which clearly intersect each other, giving us a very good confirmation for an up trade. And also our stochastic oscillator is moving from the oversold condition towards an overbought condition before we take a trade. As I said initially, whenever the candlestick has gotten to the overbought condition or an oversold condition before the intersection of your 2 moving average line, please do not take a trade. You have to take a trade either in the middle or in the downside right here. And also your stochastic oscillator has to be coming from the oversold condition. It shouldn't be in the overbought condition, rather it should be going towards an overbought condition before you take a trade. All those things you need to put into consideration anytime you want to take a trade. I hope you're getting it right. I believe this video is much more clearer. If you do ensure you let me know your thoughts in the comment section. I'll be right there waiting for you guys in the comment section to know your feedback with this strategy. So guys, this is where I'm going to stop on this video. If you're here to subscribe to this channel guys, I think you're actually missing a lot. Do ensure you subscribe to this channel, hit the notification bell so you miss any of my amazing videos. Not only that guys, if you find this video helpful, do ensure you give us a like button, share these videos to your loved ones so they can also enjoy what you're enjoying right here on this channel guys. Till I see you again in another video, keep trading guys, and bye for now.